Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 16th of June, 2020. This is episode number 1777 as we barrel our way to 1800 episodes and soon 2000. It's been a long time that I've been doing this, and thank you all for joining me every morning. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, this morning, as you may have seen, we are gapping up, and it's just another runaway market. Allocation is to risk. The Russell almost reaching its 5% upper limit. The Russell's up 60.3 points, 60.3 points, or up 4.25%. Crude is up 3.96%, up $1.47, trading at 38.58. And the DAX is up 461 points on strong zoo numbers out of Germany and several other releases from the Eurozone. The Dow Jones is up almost 1,000 points, 902 points, 3.51%. The S&P 500 is up 85.5 points, giving us a swing of about 250 points. 250 points. Amazing. The Nasdaq's up about 200 points or 2%, and gold is up $4.70, trading at 17.31 and 90 cents. Gold just really chopping up chopping up investors in that metal. The bonds are off two entire handles, and three ticks on the futures on the September contract. The 10-year notes down 14 big ticks. The Bunds off 45 ticks. Clearly allocations to risk. The market is just jumping on this opportunity. And what is pushing all of this? Well, it's two words: Fed crack. Fed crack. It's as in crack cocaine. Federal Reserve Chairman Powell begins the first 2 days of testimony before U.S. lawmakers, in which he will map out how the United States faces uncertain, uneven, and prolonged economic recovery from the novel coronavirus crisis that will likely require continued monetary and fiscal support. And that support came in the form of the Fed saying it would buy corporate bonds instead of ETFs yesterday. That's a heck of a way. You know, uh, sidebar may offend some of you because this may seem political, and it probably is. What is it about the socialization of the economy of corporate of companies that is just okay, while the socialization of services for human beings is not? About this about the United States, it just strikes me as odd. Hey, I'm not against the Fed buying corporate bonds. It's all good, good for the stock portfolio and asset valuations and stuff, but it certainly makes it more difficult for those who are starting out, students and so on, to afford things. So I'll leave you with that thought, but it just seems like it's really, we couldn't pass I think it was $110 million bill to fix the water issue in Flint, Michigan, with lead pipes and lead poisoning, but we'll, for an entire city, but we're okay pumping billions and billions and billions and trillions into corporations. But hey, again, I know I'm veering off my beaten path here, which is to focus on the economy and the markets, but I thought I'd throw that in there. It blows my mind how much everybody jumps to the rescue. It's like a building on fire when it comes to supporting the stock market, and it makes sense from a macro sense because the stock market is by definition um, under current numbers. The stock market is 65% of the U.S. economy. Can't afford to keep printing money if the stock market cannot keep going up. That is a fact. I strongly suggest you listen to a recent interview by Macro Voices with Groman, and he explains how that works, and it just makes total sense to me. Anyway, I'll get off my soapbox for now and back to the markets. We are risk on today, and that's where we are. So, uh, overall, that's what we're looking at. North Korea blew up a liaison office in retaliation for a breakdown of talks, which caused the South Korean market to fall overnight, to drop overnight. As a reaction, it seems like North Korea is escalating tensions. But that is nothing compared to what's happening with the Fed. Now remember, uh, Chairman Powell is speaking today. He's giving his testimony to the House, and tomorrow, I think the Senate or vice versa. I don't remember where he starts, but the expectation is he's going to say the same things, that interest rates will remain near zero through 2022, and a lot more stimulus is needed to ward off coronavirus and the slowdown in the economy. So that's where we stand. We still have a lot of people who are unemployed, and these stimuli are intended to push that along. So that's where we stand today. Looking at the calendar, we do have industrial production coming out in about 7 minutes or so. That's a mid-tier number. NAHB Housing Market Index comes out at 10 Eastern. That's at the same time as Fed Chair Powell's testimony begins. We also get business inventories. Business inventories expected at negative 0.6. Business inventories negative is better. NAHB Housing Market Index expected at 45, prior to 37. And if you haven't heard, retail sales had a door busting number today. It was very closely watched by the market. You can see the market pushing up or splashing up on that release today, just going vertical. Really, it moved from about 31.21 to about 31.36 in the S&P. Retail sales month on month for May had a massive swing. It had a 30, what's it look like? 32% swing. The prior is negative 14.7, and the current is plus 17.7. That's retail sales. More good news. Uh, and then we get API crude stock change at 4:30 Eastern, Fed's Clarita at 6:30, and balance of trade out of Japan at 7:50 this evening. That's what's on deck. Let's move swiftly into the review segment. Yesterday, we were opening around 29.66 or so. The expectation is for an open auction, but the overall bias is up, and the expectation was to push into at least 3,000, probably challenge 3,000, and start pushing these next levels. And those next levels are 30.11, 30.11, 30.25, 30.37, 30.40, and 30.60, 30.50, and 30.68. That's how we had looked at it. If it fails to push into that 3,000, then the expectation is for a push down into 29.38 and even to 29.20, which did not happen. Here's what actually took place. Let's see if I can squish it. Yep. So we had a nice little dip. We had a nice little dip in the morning down to the 29.50 area. Very beautiful. This is a 4-tick Renko. There's a lot of activity yesterday, so you can see it's very, very noisy. But we did have an open auction here, an open auction that dipped down quite a bit more than expected, and with an impulse on the way up, impulse pullback into the mid area, and VWAP sets us up for a run into the 3,000. We bounce at the 3,000, pullback almost to mid again before we break higher, consolidate. Nice high volume node here, and then it finally pushes through, and it handled the stock zones very, very well yesterday, ending up at the 68 stock zone. It has a single print just above it, and basically taking back all of the action from Friday. So yesterday basically formed a V bottom with Friday. after the gap low, and it's a short squeeze from hell. The shorts, man, the shorts for the last I want to say 10 years, at least 10 and a half years, the shorts have just been paid, teased for very short periods of time and then squeezed like crazy as they continue to say it's impossible for the market to be where it is, and yet here it is. So currently we're trading at 31.44. Look at where we are. We pushed the overnight high, the 31.56 and a quarter. We have a massive gap underneath us. We have a gap of about 70 points, 60 some odd points below us to yesterday's range. We've gone through a lot of territory. If I expand this out, you can see that we're back in a gap of a gap. So we have a zone up, a gap zone up that occurred on the 5th of June. We pushed up, we balanced out. This is a balance area up here. We talked about this quite extensively, and then we gapped through the gap and ran lower on this resurgence of coronavirus cases. And then today we are opening right in the middle of this gap. So we've gapped up, gapped through the gap, and now we're in the middle of the gap. The gap mid here is at 31.3750 or so, 37 even. And we are at 31.43. Inventory is long overnight, and it's likely to balance, to shift down a little bit. So that's what we're looking at. I posted this image on Twitter. Here it is. This is the roll. This is the pace of the roll right now. It looks like we are back on track. You can see that we were behind yesterday, and we pushed up pretty good into the roll. Into the roll before yesterday. Yesterday, so we're behind as of Friday. We pushed into the roll yesterday, and we're on track. We're about 65% done with the roll. So hopefully by the end of tomorrow, I'm hoping that by the end of tomorrow, we'll be very close to 90% done or so. And if it tracks the same as the March, June, I'm hoping we would be mostly done, and we would then start looking at Delta more closely. But until then, the Delta's tricky, although it's picking up pace in terms of how it's trading. You can see yesterday's Delta up here is the ES. This is the ES day session only. This is the cumulative Delta. This is the large lots. This is 10 lots to 99 lots. These are 9 lots to 1 lots. And the yellow are 100 lots or greater. And you can see there was a little bit of participation by the very large lots, but most of it was carried by small lots yesterday. And a lot of that has to do with the rollover. So that's where we stand. In terms of the overnight action, really strong volume, 536,000. Again, keep in mind the roll is here, so we're going to have heavier volume anyway. But inventory is 100% long, 100% long, and you can see that we popped higher on retail sales and are pushing with the balance really being below. We were balancing near highs throughout the session. We've held the mid throughout the session, very bullish action, but expecting it to pull back a little bit on the open, expecting a reversal on the open once things get going. Because inventory is very long, we've been running for quite a bit. I expect some profit taking to take place as we come in ahead of the testimony by Fed's Powell. So what does it look like on the order flow? Ka-chow. I mean, it is like just a rocket. This is like a this is like what an Elon Musk creation here, heading for space. So what we had in the overnight session is a pretty decent auction going back and forth. We're seeing liquidity come into the September contract and trading out. So liquidity sitting, resting here, pushed through. This is a classic push through. We have a nice big collision at the liquidity. We have a collision pullback for an attempt to continue. Falls down, comes back to the collision zone right there. This is classic support and resistance kind of trading, but we're using volume and resting liquidity to see where the turn is happening. That's what's important about CT Bookmap. Again, you can find us at ctbookmap.pro. I think they have a 14-day a 14-day demo or trial, and I would feed it with Rhythmic. And of course, reach out to edgeclear.com. That's my brokerage, and I'll be sure they handle you well, as they do with all customers. Feed it with Rhythmic to get full depth, and that's basically the setup that I have. You can see it says down here that it's powered by Omni and Rhythmic, and this is live. And so this is where we stand. We took out the last frontier in terms of liquidity, and it's just out of space right now. There's no liquidity, resting liquidity in the book, and it seems to be very temporary. I think this is a precarious situation, long or short, in that the market's digesting this information. I'm expecting it down at 31.30 right back here at some point today. I'm expecting it to come back here. I'm looking for this liquidity to be taken. I don't expect that to hold. We are in the gap zone. You can see it says gap zone here. That gap zone goes all the way down. We are in the gap zone, and I'm expecting it to trickle down and move towards the 31.30 this morning. But we'll see. But the just understand that the order flow coming in is that the heat map showing that there isn't any stable liquidity. And so it's likely to be noisy on the open this morning. It's likely to just slosh around looking for fills as market on open orders come in. I expect a wide opening swing and a push early on. We're moving away, farther and farther away from the high, the overnight high. We're about 13 points away. There's the overnight high. This is where we are now, and we are in this gap zone. The fact that we're in this gap zone in a composite low volume node, look at the composite volume. That's this black line here. This is all the volume at price going back to this date, to February 19th, the swing of February 19th, 2020. And you can see there's very little that traded in this area. So this is kind of an imbalance area. And so what it's likely to do, as we often do in an imbalance area, is open and chop and just chop around here and really build out this area, auction the heck out of this area since the gap is so large. Okay, so let's move into what's expected for today with our wonderful Edge Clear graphic here. Again, please join us at Edge Clear. We are better than the rest, in my opinion. So come join us. You'll get assigned to a personal broker who you can reach by phone. No teleprompting system in place, and a brokerage that's designed for traders by traders. So your brokers are also traders in this situation. So here's where we're going for today. I'm expecting the following. The fact that we are in this gap zone makes it so that whatever I say here is just pure speculation that probably has a 50-50 probability, and we're opening right in the middle of it. We're opening right in the center of it. So I'm going to spare you and myself some BS and call it like it is, as I always like to do, and say that whatever I print on here doesn't really matter, because we are opening in a low volume node and a low volume area. in a low volume zone in the middle of a gap zone. This is likely to be a very choppy morning. And overall, I don't know if the market's gone too far given the information that's already been priced in. Remember, the market doesn't price in what we know today. It prices in what we know today. Uh, it prices in the future given the information we know today. So it's already pricing in the Fed corporate buying and what Jeremy is Powell. Jeremy, make him sound like he's a buddy of mine. I can call him by his first name. Fed Chair Powell, it's pricing that in. The only thing impacting this are surprises. And so I expect a pretty, the market, the participants are going to come in rigged up for something to happen. It is likely to see two-way action on the open today as longs lighten up and as short, those people who want to be short start building a position. And then I expect the overnight high to be taken out because of the overnight historical probability and a potential for a push. But really, honestly, it is just a wash. I have no idea what this thing is going to do. All I'm going to say is that I'm playing for the overnight high. I'm playing for the gap mid, and that's about it, really. Depending on where we open, that's about it. If it pulls back, just look for the gap zone mid between yesterday's high and where it opens. Look for the 50% point, and that is likely to be your floor. Anything below that starts to bring in shorts, in my opinion. We start to look to the short side. But as long as it stays above there, we're looking for the overnight high. Right now, that overnight high is 56.25. That is a 98% historical probability. As I've always said, past performance is not necessarily indicative of future results, but that stat is relatively stable, that we're likely to take out the overnight high or the overnight low. The overnight low would have to traverse across a huge range to get to, so I'm expecting the overnight high to be taken out. Of course, that is in line with the trend. Again, I'm not going to draw scenario two and all that stuff. It's nonsense at this point because we're in no man's land and we're in the middle of a gap on a big gap up. So that's where we stand today. Again, I'd invite you to come in to EdgeClear. Check us out. Not only do we have the what I think is the best deal on the micros, but we also have what I think are the best deals and best solutions for traders for all electronic futures. You'll be hooked up with an award-winning broker, as well as if you have a group of 5 people or more that you trade with, you should probably consider coming to us for a commission pool. A commission pool simply sets you up almost like a prop shop where everybody's volume counts towards hitting thresholds where your overall commission goes way down to almost a wholesale price. Check this out. You can find us at edgeclear.com. And of course, you've got the phone numbers in front of you. I would appreciate your support. Good luck, and I'll catch you tomorrow morning. Keep your risk in check today because we are out of bounds. We are out of bounds, people. Keep your risk in check. This thing could run. Take care.